Hi, Warriors. Let's have a great week. How's everyone doing today? Good morning. Okay. So,
good morning, Coach. I'll be available in about 2 minutes.
Okay, thanks, Blake. Good morning to you and
Morning,
Ryan. Hey, Ryan. You were looking for a spot to short cable, I recall from last week. Have you done it, or what? Are you doing anything with cable? No.
I'm hoping I haven't missed it. I was out Friday afternoon.
Yeah.
So no, yeah. Ideally, I'd like something up 130s, but
yeah,
that may be a bit too picky. But no, I'm hoping I haven't missed it. Euro sterling as well. I was eyeing behind that 85 level. Didn't quite get there either. So
yeah, like a double bottom.
Yeah, I'm keeping my powder dry for now, even though I've got a real bad itch I need to scratch.
Okay. Does last week's action in US dollar yen convince you that we've put in a pretty important top, or where do you think that we're headed to? I actually think for me a natural place would be back at, although I'll probably bottom before that, would be back at the 38 level where it broke out, and you have some a long-term moving average there, maybe 140, big round number. What do you think?
Yeah, I think we've solidified that top now. My magic line was 143.5, and we closed below there, held below there. We tested the 142, bounced to 143. We've come back pretty quickly to 142. So that suggests, if it breaks, we're probably going to be 141 not long after. Got a bit of resistance into that 141 area. Your 138.
It would still be a great sale if it happened, and it could happen. I was looking at that area, so people that didn't believe it up here, multiple opportunities, but you have a lot of stuff that'll come in right around this 3.5 that be a natural if it did that, wouldn't it?
Yeah, it's like I always say, when you make highs or lows, whatever, when you form levels, you've had the big move to 145, now broken down, you've broken down for some levels, it makes it all hard work again. You've got to do it all over again, haven't you? You've got to break up the levels. But
I've been long stuff like that.
Yeah, exactly. You know what it's like. But it's still at the back of my mind, what's changed? Nothing in Japan has changed. So, I don't know why we're seeing such yen strength, especially with US yield still holding up. It's a complete opposite trade, really.
A breakdown of a correlation.
I'm not convinced yet that we're heading lower meaningfully. But, like Dale, you let the levels do the talking. If you break under 142.
I mean, I think the only thing that's changed is the direction of the Nikkei, and that could be having pretty good impact on it, right? Will the Japanese buy the yen for safe haven, or everyone else around the world because of the Nikkei selling off? You would think it'd be more of a Japanese type situation.
Well, it could be our old mate, Mr. Buffett, who was piling into Japanese stocks a few months ago and telling everyone that he's still piling in. He's not going to give anyone free lunch, is he? He's probably selling into everyone else jumping in late.
Yeah, could be. Yeah, that's how the Chinese trade too. They'll come out with news that they're going to be selling something, and all they want to do is be able to buy it cheaper and so forth. But anyway, so I mean that's changed. S&Ps. Who wants to talk about S&Ps here today?
Oh, don't worry, I will.
Okay. All right. Well, then I'm not going to.
I'm just waiting in the wind. I'm letting you guys finish your conversation. I got plenty to say today.
He's wound up like a top.
Okay,
that's
good.
Right.
All right. Just want to update everyone on the beans. You know, they held 14. They're pulling back a pretty orderly advance. That's only the 2-hour, but you know, as things first they had a lot too much rain for beans. That's what, you know, part of what was behind this rally, but still looks good. Corn was a weak sister because it could handle all that water, and wheat to me looks so far like an orderly pullback, may not be a bad area. So, you know, just a few of the things that I cover. And, you know, when it comes to just an individual tech, AMD is pretty big for what tech does, and see how far off the highs we are. It being a NASDAQ stock on top of it, but you know, there are, and I didn't even check the DAX. Was Europe lower again today?
Well, they've all been following pretty much the same pattern. DAX was coming off the highs again. I haven't checked to see if it was lower this morning. Let's have a quick peeky at it. The DAX, no, we're up. We're up in the DAX on the day.
Okay, so I'm thinking maybe so Blake, you see this RSI? This was drive 1 with a confirmed high.
Yeah.
And this is drive 2 with its first divergence. And if we get good inflation news, we'll get drive 3. And if the RSI cannot get back above 70, it's worth a shot on the short side.
All right.
So, I mean, that's the formation I see. It's developing. And I know people have numbers where it would turn bad. I think it needs to get back inside this throw over, and the gate, it comes in around 43.40.
Well,
So
I don't disagree with you. Yeah.
Okay.
I don't disagree with you.
Okay. So came in. How are you?
He's not.
He's off. Yeah, he's off. For a few
okay.
days.
I guess I should check participants before I call out people's names. Right? Okay. Well, Steve's here this morning. Hey, Steve, how are you, buddy? Well, maybe he isn't. Okay, so it's me and you, Ryan, till Blake wants to jump in. So the metals.
Yeah, I'm here, just letting you guys know I'm here. I'm letting you guys just have some conversation, and then I'll for sure take over in a little bit. So I'm here, just letting you know.
So I'm here as well.
Okay, I still think silver really hasn't done anything wrong since this low, and I do think, Steve, that the dollar's going to make new lows now.
Yes, I totally agree.
Okay, so some targets down around 99, and euro is EG turning. The euro's a pretty clean formation.
Exactly. The euro was the biggest tell, having to do with the fate of the dollar.
Yeah, well, you had the triangle, right? So if you bought the
pennant, yeah, we had a bullish pennant.
Yeah. Okay.
And we broke through it on Friday. So
right. You have upside targets?
Oh, I think there is potentially decent more upside. 111 is my next target, roughly.
Okay. Yeah, I could see 10.5, and then I've been talking about this moving average for a while, up around 112. So we'll see up here. That's a weekly moving average. And then I was thinking that maybe this was 1, this is 2, and then we get 3. And that might complete the correction, that we've had from the big run. And then I think there might be a dollar rally, and I still think it's going to be because of risk off or something that has to do with escalation in Ukraine, or it could be rates. So
oh my God, I'm getting the tinfoil hat right now.
Is it going to be rates?
No, I'm just thinking about
so yeah. Anyway, rates. So here we are.
Well, you make a bit of a point now on the Ukraine front, because we got this stuff with America, looking to send cluster bombs, which everyone else is against.
Yeah, they're outlawed in over 100 countries.
Yeah. So, is that going to bring is it a threat to Russia, or are they actually going to use them, and then that'll mean Russia scales up, and then, things get worse?
Yeah. I mean, it still is, another pot on the stove. It is the biggest land war since World War II. I think, again, and I'm not saying that I've nailed the bottom on VIX, but, to me, the VIX, when it was 13, was, really priced for perfection. And here's the daily on it.
I'm surprised that's not higher either. I mean, we've just had the Netherlands government collapse over immigration. We've got it kicking off all over France, kicking off in Belgium. It's spreading, and if governments start falling over this, I don't know how long it can last before the market takes notice.
Yeah. Well, I mean, definitely it's the DAX outperformed on the way up. So if you're an S&P trader, you got to pay attention to it, that perhaps it's signaling that it might lead on the way down. So, I mean, the trade people were taking, and I interviewed guys that believed in it. They were all saying, outperformance of Europe. They were buying Europe over US, emerging markets over US, and it's given back that whole gain as far as its outperformance in a fairly short period of time.
Yeah. Would that mean another big shift back into bonds? And that means you've probably got a top in bond yields as well.
That could be it. If they, people thought that all the way down in the bear market and stocks in 21, and bonds actually led it. I look at the bonds, and that 104 level was so important. And, I've flipped more than a hamburger on bonds. Really.
What else are you flipping other than hamburgers?
His finger.
I'll flip you the next time if I ever meet you. For asking me that question. Huh?
You seen the size of him? Good luck.
Yeah. I've seen Steve. He could probably take an old man like me. So anyway, this had me bearish for a long time. And then I thought, well, if the market comes off, there'll be a flight to quality. I don't know. I could say right now, I wouldn't be long. So I don't know. Do you guys think that we're going to, the 10-year still far away from its yields, peak at 430? I think this is it. This is the market right here. It's a dollar. It's a market. We'll see. I have a hard time wanting to short these too. It's probably a safer buy with a stop if it's a false breakdown. Then you get out under 380. But right now, you have to say it's broken out of that pennant. Steve, is that a pennant? I thought it was a descending triangle. I've been misnaming technical formations for about 40 years. What is this, the formation?
Yes, it's like a large pennant, but it's very, very close to descending triangle as well. But to be honest, name is less important, because the most important part is
what it does.
That both imply the exact same type of behavior.
Oh, well, a descending triangle implies a top. Okay, that's
not necessarily. Depends on which direction it breaks from.
Oh, okay.
If it breaks lower, yes, then it's a topping formation. Otherwise,
in Edwards and McGee, it's a reversal formation. And an ascending is a reversal formation.
I beg to differ. I think it can be both. I always pay attention to which direction we break towards.
Well, when we all get to heaven, I'm going to arrange an interview. We'll have a debate between you and the authors of technical analysis of stock trends that, is a sacred book to old fogies like me. So gold silver ratio, silver, looks like it could break down. There's a lot of things that are either or still as I go through the board. You guys feel that way?
That's
Yes.
because we have the most important data item of the month
Hey,
coming
how
up.
are you? I looked for you
Hello,
earlier.
I made it. I
you
made
made
it.
it.
I'm here.
All right. So Stel is here for the Tonight Show.
Damn, bad
And-
luck.
Huh?
I was hoping we would avoid having him, but now we're doomed.
No, I want to hear what were you going to say, buddy?
No, I was just saying that we have the most important data point of the month.
Yeah.
And it's going to be crucial because the expectation for USDJPY is the low threes, 3.1, 3.2, something like that. And
Wow.
the core is also expected to drop. I think core, the stickier one, will continue to drop, albeit at a lower pace. But I tell you what, if headline CPI comes in lower than expected, which I think it will, this has been the trend in the US for a while. I mean, if we get a 2-handle or something like that, oh man, this breakout in yields, I think is going to be no more, and it's going to be a false breakout, and then, as they say, all change in the market. So yields are still driving. For me, they're still the driving force, and we saw the 10-year breakout because a lot of the rate cuts have been moved further out and further out. They keep getting moved further out. Or at least part of it is that. I think the other part is that bullish technical formation that we've been talking about for ages. But
remember I said if you covered up, I remember our conversation.
Yes.
If you cover up the title, what would you say about this price action?
Yes, and I said I think it looks bullish. Yeah. But the fundamentals for me underlying are not supporting that. So do we break out? Well, we did. The question is, do we stay broken out?
That's how Ryan feels.
Yeah.
About this right now too. That's his take, and that's why it's like an either or. It's hard to have an opinion for fresh money what to do here, because it could do either. What if we get a bad print? I mean, we haven't had, since the market's already, raising its expectations for a lower number. What if it doesn't come in that way?
Yeah.
Well,
we make new highs in yields.
Yeah. Well, yes, I've said for a while. I think this is my view is that yields are, are peaking. But if peaking duck, no. If we see inflation starting to, ramp up higher, then that's a game changer. Then we have to reconsider everything. But for now, this is my main theme. And look at China. Look at China CPI this morning, 0% year on year. PPI minus 5.5% year on year. So you're seeing it everywhere. There are exceptions. Norway today beat expectations on inflation, still high. The UK is still high, but there are reasons for that for those countries. But for the US, I still think they're going to be inflation is going to be disappointing to the downside. And if we do see a 2-handle, what do you think the Fed does? If we get any kind of 2-handle, they're going to say, right, 6 to 12 months from now, we're going to be at target, maybe even below. So what do? They stop.
Yeah.
Hey, I actually, one of the things that Scott mentioned, and one of the things that I didn't hear you guys talk about, that the China inflation data that came out overnight was really, really weak. I think that's it's something I wanted everybody watching that via the week ahead video, but I don't know if you saw the CPI data. It came in flat. I mean,
look at copper. Fresh money to me. Well, we have a bearish consolidation happening after this big break.
Yeah, and I mean, if you look at what happened with the Aussie got slammed back down towards big support here. I'm short some Aussie, and I'm everybody probably knows that I'm looking at a bear flag pattern now, and it's or a bearish wedge, however you want to look at it, but that it does look weak, and I think this source of the deflation that we're feeling coming from China. I mean, how's it going to feed into the rest of the world, including here in the United States? I mean, there's that big debate whether we're going to see, continued disinflation, or are we going to have sticky inflation? And, I've heard both arguments. I'm sure you have too, Dale. And it's hard to really, when you see numbers like we just saw out of China, it's hard to sit here and think that inflation is going to be too terribly sticky. I don't know.
But it's also important to remember that right after CPI, the next day we got PPI, which could have a bigger impact than CPI.
Yeah.
That's where we've seen deflationary or disinflationary numbers coming in across Europe, negative year-on-year PPI numbers, and that's all going to feed in, but there's always a lag. And
yeah.
Is that Tuesday and Wednesday, those numbers?
Actually, it's Wednesday and Thursday. Wednesday and Thursday.
Thank you.
Yeah, it's gonna be a pretty busy week. I mean, we got, and matter of fact, I don't know. Today we have we also are gonna have what's Nick what's his name from the Wall Street Journal? Nick Timiraos. Yeah, I believe he's having a fireside chat with FOMC member Barr. So it's gonna be it's about bank supervision and capital rules. So it's going to be that might actually spark some attention as well. So there's going to be some volatility. A lot of Fed speak this week. Lots of Fed speak. I mean, if you go, I think there's about probably 10 FOMC members running their motor mouse this week. Hey Dale, earlier you asked Ryan if he took advantage of the cable short. I actually just closed my cable short from Friday, and I put it in the trades room. I was short above, close to 128.25, and I just closed out this morning because we were here. Now we broke a little bit further. I mean, we're just breaking into new lows right now. But we're setting up a nice little double top with the cable. I kind of made an argument on the week ahead video why this could be a big inflection point for the cable because of the long-term weekly 618 retracement. But we do have a lot of data. I mean, tomorrow morning, Ryan, that we have UK jobs tomorrow, and then GDP later on this week. So we have the UK jobs data tomorrow morning. I'll be sleeping, so I didn't want to, I don't want to have cable exposure then, but I do think this is going to be a big deal. Do you have any flavor on how you're feeling about the UK jobs picture, Ryan?
Well, it should still show a tight jobs market. The important number will be the wages number. If we get another strong read from there, that's going to feed into the inflation. It is expected to jump to 6.8% from 6.5, but come down a little bit when you strip out bonuses. But we've seen the numbers. A lot of market getting wrong with their expectations. They got it wrong with CPI. They might get it wrong with wages.
Yeah, and they might. And I like I said, I think the cable's around such a big pivot. And I made a big stink about this on the week ahead video. If you guys didn't watch it, just go back and watch that video from, I think I posted on Sunday. This is a weekly chart. This is the 618. You notice we've been floating around this level, Dale. I don't know if you've seen it. We've been floating around here for like literally 5 weeks. Within a couple hundred pips. And when you're looking at a weekly chart, 150 pips, 100 pips, that you're basically there. That's not like, oh God, look, we got a weekly close above this, weekly level. No, I mean, it's an area, and we've been on both sides of that area within a couple hundred pips. So we're basically holding it as far as I'm concerned. So that's why I believe it is do or die for the cable. And then one of the other things I want to point out about the cable, if you haven't seen it this morning, here, let's pull it up here. You can look at the euro sterling, and you can see what big support that we're holding there at 85.20. We got a nice little double bottom setting up with the euro sterling on a bigger scale. Ryan, are you still playing this one to the long side from here?
No, I'm trying to be picky. I was looking at closer to 85s, but I've got a feeling that, like you say, I was talking about the 85.20 this morning. That's where the support's coming ahead of the big 85. So that's a number to watch, definitely.
Okay, yeah, I mean it's pretty key support as far as I'm concerned.
It looks pretty good.
Yeah, I mean, it's I've kind of made the case in the chat room last week, and I didn't do it. Sometimes I'll argue points, but I won't necessarily trade it. But I kind of argued that point last week when I was chatting with K-Man. I'm like, well, the risk reward is there to be on the long side, down here on the euro sterling.
Yeah. So the risk
I didn't
reward.
have a reason. Yeah, I didn't have a reason to buy it. I just, it was kind of like it's there. But I'm sorry. Go ahead.
Oh, that's all right. So that implies, if you're bearish a dollar, you should be buying the euro, and when you're bullish a dollar, you should be shorting cable.
Yeah, there you go.
Right.
That's a way to play.
I tell people it's important, even if you don't trade EG, to kind of have a feel for direction, because it gives you your preferred longs and shorts. And if you don't know what direction this is going on, you could be right about the movement in the dollar and be in the wrong pair, right the market, wrong the trade. So it's important to every trader that trades currencies has to pay attention to euro pound.
And look at prices in general, because that tells you whether, like you say, whether it's in cable, whether it's the pound moving or the dollar moving.
Yeah, it sure does. Hey, real quick,
like how you guys wouldn't remember this. Maybe Ryan would. Remember when were you around when there was a D-mark?
Yeah.
Okay, so the Swiss D-mark spread would give you the feel for direction on the dollar. That's the one I used to watch all the time, Swiss mark. Anyway,
all right.
I miss you, Swiss. I miss the Deutschmark.
Hey, real quick, we have a NOS coming, right?
Yes.
Okay, and so he's gonna maybe when he gets here, ask him about crude, because there was
that's what we'll talk about.
And Mike in our chat room, he posted this from Brianne Kelly, said this morning via Live Squawk, Iran seized an oil tanker, parried U.S. Navy in Gulf. So maybe
what's parried means, Blake? You're a military guy.
No, I mean like avoided. I mean, I don't know. I'm guessing. Maybe he knows. I'm like, but I'm not a swordsmanship person.
Yeah, you weren't a Navy guy, so
I was not. I'm in the men's department of the Navy.
Someone said that means shadowing. It was shadowed.
Oh, okay. Got it. All right. Well, yeah, I was in the men's department of the Navy, so which is the Marine Corps. So I don't know what they talk about there. Anyway, because remember, we're a department of the Navy. It's a military joke.
That's right.
Some people got it, some people didn't. It doesn't really matter. Anyway,
that's right.
Ask him about that. But you were talking a little bit about yields, and I want to talk about this because if you take a look at this is one of the other things that I did on the week ahead video, is I looked at yields globally, and I talked about them because I think it's a big deal that you're seeing it's not just the 10-year. Everybody's like, oh, look, the 10-year, the 10-year.
Show the yields.
No, yeah, go take a look at the global yield. What's happening with global bond market around the world, minus Japan. There's some big moves, but take a look at the 10-year. Really key support here, horizontal support. This is 161% extension of the last, bounce higher. So you can see how key this is. So when you have the 10-year and you're like, okay, well, this is, again, you talk about risk reward. This is a risk reward for it to reverse at these levels and yields to come down. If they do, I think that's going to have an effect on the dollar yen, which you were talking about earlier about the Nikkei, which I am a little concerned with the Nikkei because I'm not sure if this is a bullet or a reversal or just a flag pattern. I'm kind of on the fence about this too. But if yields really start to reverse, then I think the dollar yen is going to feel that downside pressure of yields. And I don't think we have any data coming out right now. Do we, Stelios? Steve, do you know? Yeah, I don't think it's anything worth noting this morning. There's some Canadian building permits, but no, that's not anything that I'm really concerned with right now. So I know Anas is going to be coming here. So I just want to say that we got to focus on yields, but these are the types of things that we all talk about in the ForexAnalytix chat room. I mean, if you're in the ForexAnalytix community, we're talking about this. If you're in the Flownomics room, you're talking about probably a lot of macro ideas. We have news and research room. We have trades room where you see, this is where Blake, got out of his cable this morning right here when it happened. Oh, Blake's sitting in a dollar Mexican peso position and he's down money right now. Yes, I am. You know, you can see, man, you can see exactly what my position price is for that trade too. You know, I post where I'm at and what I'm doing in these in these chat rooms. So and it's not just me, it's everybody else too. So if you want to be part of the ForexAnalytix community, you know, take advantage of it. It's $1 for 10 days to try it out. Jump in our chat room, see what it's all about. And with that being said, Dale, I am going to pass it over to you. Steve, Stelios, Ryan, thank you guys for being here. Dale, have a great interview with Anas. I think this is going to be a great one. And don't forget to ask me the questions about what we were just talking about with on Live Squawk.
Thank you, Dream Team.
All right, thanks everybody.
Blake. Thanks, Blake and Stel and Steve and Ryan.
Thank you, everybody.
Appreciate
Cheers,
it.
guys.
We don't need charts today in Nas El Haji, do we? We can just
It's a nice joke this morning.
How are you
today? Good morning. So, very well, very well.
I guess was a little incident in the Gulf, Iranian hijacking of a tanker, and
yeah, but they became so they are so normal right now, so they are not going to affect the market in any way that they used to in the past.
Okay. Could it be used eventually as some type of rationale for things beginning to really heat up?
Well, I don't think so. I think this is just part of the weekly life in that part of the world. So it has really no impact.
And I just have one other question. I'll let you, really thank you for bringing this PowerPoint. I would like to ask you if RSPR is at, I think, 40-year lows right now in us. Does that put a floor under crude? And is the U.S. beginning to refill it, or they haven't even started to refill
I'm glad you asked this question because it is part of the presentation, and I have few slides on that.
Okay, cool. So, all right. So, Europe was very fortunate last year with weather, and natural gas has crashed. Do you get lucky 2 years in a row and have abnormally warm winter in Europe, or is this the winter where what they were afraid of last year happens?
Well, no one can predict the weather precisely, but if it is going to be a severe winter, it's going to be really bad, and I will show a slide here and then I will comment on it. Let me just do this. So
I'm just going to let you take it away, and obviously all of these are top of mind for you, and you're one of the best at
thank you. There are three issues.
Go ahead.
Thank you. There are three issues that I want to mention today. We published a report last week on the possibility of disruption in Libya and what its impact on the market. This week, we are going to publish 3 reports. In fact, we published one this morning on, it's related to Europe's energy crisis, where we looked at LNG exports from Israel and Egypt. Israel exports gas via pipeline to Egypt, where it's converted to LNG and then exported to Europe. And LNG exports of Egypt are declining substantially. One of the reasons because of the massive increase in domestic consumption of gas, and the other one is the low gas prices, because what Israel charges Egypt is literally will make Egypt lose money. Speaking of Egypt, by the way, a company basically went for an IPO. The first day of trading was yesterday, and the stock went up by 60,000%.
Should I take profits?
60,000%. The government intervened and nullified all the contracts, and they canceled the whole day.
Doesn't sound like it sounds like it makes the Chinese market look straight.
So today is the official day, and it went up by 3,500%.
Okay.
That's speaking of Egypt. But the idea here is, when we talk about Europe, Europe is not out of the wood yet, especially when it comes to natural gas. And we still have many problems in Europe. And if the winter is severe, we have the hurricanes in the Gulf of Mexico, that's in the summer and fall. And then if the winter is severe, we are going to end up with several issues. And the report that we released today showing that Egypt's exports are declining substantially. There are no additional exports coming from anywhere else. And if the winter is severe in Asia, then that competition between China and Europe is going to heat up again and is going to lead to probably another record price for LNG.
Okay.
The issue that I want to show, and it's related to the energy transition, that last year, as we mentioned in the last show, last year we witnessed a kind of unprecedented competition among energy sources, simply because their prices were going up and people were shifting. And now we got the final numbers for 2022, and it shows a noticeable increase in oil use in power generation in several countries around the world, including the United States and several European countries. Okay. We haven't seen this in probably at least 3 decades.
Okay.
So we are seeing this because of that competition. So link that to LNG. If LNG prices go up again and they reach record again, then oil use, especially in the northeast of the United States, in power generation is going to increase.
So the demand picture is good. Let me ask you this then. Up until recently, then why did the Saudi cuts both end up with one-day rallies and then bigger declines? And I also would like to know if you think that Russia could still squeeze Europe more than they have.
Sure. For the Saudis, let's go back and look at the OPEC Plus meeting. The OPEC Plus meeting, most analysts and traders expected OPEC Plus to cut production. They did not. What they did is they said, okay, we are going to extend our cut to end of 2024. Because there was no cut, this is bearish, and oil prices would have declined by several dollars. So what the Saudis did, said, okay, if I cannot get OPEC Plus to cut, I am going to cut voluntarily 1 million barrels a day, an additional 1 million barrels a day, to compensate for the OPEC cut that everyone was expecting. So why people expected prices to go up from the cut? It was just a compensation for a bearish event.
Yeah. Okay.
So we have to look at the other side. Where would prices be if the Saudis did not cut?
Yeah, a lot lower.
Now, regarding Russia, it is our experience with Russia since 2016, since they joined OPEC Plus, that they will not cut voluntarily. They never cut voluntarily. They are forced to cut either through maintenance, weather, natural events, fires, explosions, whatever.
Yeah.
And when the Saudis force them to cut. We are seeing them cutting right now. Why? Because the Saudis used a policy of carrot and stick. The carrot basically is they change their quota a little bit, so they allow them to increase production or without violating the quota, on the condition that they will actually cut. But what was the stick? In our view, those tankers that are near Ain Sokhna at the mouth of the Suez Canal, we have about, until 3 weeks ago, we had 24 million barrels of oil sitting there, 11 tankers, all of them VLCC. And now they decline a little bit, but we have about, this morning, we have 8 of them still there. Some of them been there for several weeks. And the idea here is this did not happen before, except in 2020 during the lockdown. So there is no reason for the Saudis to have them there unless they really want the Russians to see them and say, you know what, if you are not going to cut, I'm going to flood the market again, the same way I did in March 2020. So you cut or I'll flood the market.
That's when we went negative.
That's after that, yes.
Yeah.
But looking at this slide, basically, this just shows how Egypt's exports basically declined that's LNG export declined, and most of that basically goes to Europe. And now on the SPR, on your question, this is the SPR. You can see we're here in the middle of that in 2001. You can see that built. That's when George W. Bush decided to fill it up after September 11th terrorist attack. And then this is the decline at the end here. And these are what we have right now. We have about 144 million barrels of sweet crude, and we have 203 million barrels of sour crude. The recent releases, the 26 million that were mandated by the Congress, all of them were sweet crude. Now, why we are talking about the SPR for the same reason you asked me, because the administration started supposedly refilling the SPR. To me, it's not a refill when you release 221 million barrels in 2022, and you come to 2023 and you add to that 26 million, so you are talking about almost 235 million, only to buy 12.
Yeah.
So that's what they are buying, 12 million.
Yeah.
So the first thing here, looking at 2022, I know a lot of people are against the withdrawal, and a lot of people along the political lines attacking the Biden administration. I am being apolitical here. The fact is, this release of 180 million in 2022, it changed the whole literature of the SPR. It changed the foreign policy, it changed the energy policy, it changed a lot of things, because it was so effective politically, so effective strategically, so effective in terms of national security, so effective in terms of lowering prices. It was an amazing policy, and this has changed the literature.
It was a great short by the administration at one point.
So you look at this chart, you can see the correlation between prices and the SPR.
So now they're taking profits, but they're still short, right?
I don't know about profits, because based on our calculation, they sold oil at $95.25, $95.25. But the cost of it was over 200.
Oh.
So financially,
why?
Because
why 200? I mean, you know, the market's never been there. Is it just
the
carrying charges?
I'll tell you how. I'll tell you how. Let's say, look at the oil that they bought, let's say in 1978.
Yeah.
Okay. They bought it at that time, let's say at $27. Okay. But $27 of $1978.
Okay. Yeah, the currency.
Okay. So you got to look at the you got to look at the inflation, you got to look at the interest rate, and then you got to look at the infrastructure cost, and you got to look at the management cost. So the cost was over $200. So financially, from an accounting point of view, it was a loss. But from a national security point of view, from a strategic point of view, from economic point of view, it's priceless. Because the whole world benefited from a lower price. Otherwise, prices would have been at 140 or more without the release of the SPR. And Putin would have literally controlled Europe anyway without the SPR. So the benefits were great. The strategic benefits were great. But the bottom line here is all the refill, all the 12 million they are refilling are sour crude. They are sour crude. Why? We need sour crude. We don't need sweet crude, because the shale revolution added 8 million barrels of light sweet. I have them under the ground. I can produce them at any time. Why I have to store it? I have no problem with light sweet. But most of my imports, almost 97, 98% of my imports, as shown here, is sour. So you can see this distance here, almost the whole chart. Everything is sour here. Okay. So if I have disruptions around the world, I need SPR to compensate for that. So I need sour. At the same time, the problems I have in the United States, always in the Gulf of Mexico because of the hurricanes.
True.
And that's sour too.
Okay.
So the two things I want to compensate for, both of them are sour, and therefore it will be a good idea to rebuild the SPR with more sour and stop building the sweet.
Okay.
But the bottom line of this is there is a very limited impact on oil prices. Why? Of course, the 12 million is nothing, so there is no impact there. But assume that they decide to refill 60 or 90 million. Limited impact too. Why? Because the injection rate, technically speaking, the injection rate is very small. That's why they are buying 3 million or 3.2 for a month, because it takes a month to re-inject 3 million into those caverns on one site.
So this crisis that Europe's going to have, how does it play out?
Okay.
They're already in pretty weak economic numbers. Some people are saying Europe is in recession already.
Yes, some countries are already in recession, but this brings us, since we are speaking about Europe, so let me show you the picture of Europe, because this is very important point.
And the Chinese reopening, Anas, has been disappointing too. Has that had something to do with prices really not making a move, big move?
It wasn't disappointing for us. Anyone can go to our oil market outlook. They can search for it. EOA 2023 oil market outlook. We published this in early January. We wrote most of it in December. Everything happening in China today is written there.
Okay.
And
you were expecting the reopening to not be, really
correct. So we nailed it. Well, I mean, we nailed it, and we have. So we are fine with our outlook. But to bring us to Europe and talking about this, if you read the news, you listen to the media, you watch TV, you would think that coal is gone and oil demand is going to peak tomorrow.
Yeah.
Okay, that's what the media is telling you. And the media is so biased to the extent that I've been frustrated last week, because some auto companies were releasing their numbers and the media focused on the sales. So they mentioned the numbers, they mentioned the percentages in terms of increase, etc., for every car, for every manufacturer, etc. When it came to electric vehicles, they did not mention numbers. They mentioned only percentages.
Okay.
Because in this way they can show you a big percentage. Anyway, looking at this chart here, and this is where the media basically is playing a very nasty role. Look at this chart here. This is world energy consumption by source. That's primary energy in 2022. The year just ended. And what is the conclusion of that? 82% of world primary energy used is fossil fuel.
Right.
How much money we spent?
You can't lift the poor up by abandoning fossil fuels at this time.
Yes, Dale, but listen to this. How much did we spend on renewable energy since 2010 until today? More than $4 trillion. More than $4 trillion.
Yeah.
More than $4 trillion.
So if we had invested that in drilling and energy production, we wouldn't need oil from anyone except if we couldn't get enough sour.
So for $4 trillion, we got only 7%. Half of it was already in existence. So only 3.5% came for $3 trillion. Now let's go to Europe, since you mentioned Europe, and let's look at natural gas. For Europe, despite all the efforts, despite all the money spent on green energy, 71% of energy consumed in Europe comes from fossil fuel. And look at oil, 36%.
Yeah.
And look at gas, 22%. So the idea is, you talk about this energy transition, but show me the numbers. Where is it? Now, let's move on and look at, because some people say, well, that's total energy, but all the changes are happening in the power sector. Well, here is the power sector. This is in the world. 61% of electricity generated in the world, 61% comes from fossil fuel. We are still 35% dependent on coal. Now, let's look at this one. That's Europe. And this is interesting because 38% comes from fossil fuel, despite the fact that they have large amount of hydro.
Yeah.
Yes, renewable energy is playing a role, but they almost exhausted everything. And the main point, Dale, here is this. Look at the percentage of oil used, 1%. What that means is, if that 27% doubles, has no impact on oil.
Okay.
It might have an impact on coal or natural gas, but it's not going to affect the oil demand. Now let's look at this one, and this is really the shocking one. China.
61% coal.
61% coal.
Yeah.
Yellen was there in China just yesterday, and Kerry went to China to talk about climate change. Good luck.
Well, he's going to. But what do you think? Why do you think Yellen really went there?
I have no idea, but that's Boeing that she did. Probably you've seen the video. That just was, I don't know, was ridiculous. I have no idea why she went there, but I know one thing about her.
Well, I mean, they did just announce that they're going to restrict even more chips from China as we keep poking the tiger in the eye.
But she never mentioned anything about the price cap. She never talked about the sanctions on Russian crude, etc., which she is trying to be a champion. Here is my last slide, by the way. I showed you China. Now let's look at India.
Wow. Yeah, they really love coal.
74%.
You know, when I was a kid, my house was heated by coal. There was I lived in an apartment complex south side of Chicago, and there'd be a furnace in the basement and a lot of coal laying around. My mom was never really happy when I came out of there from playing, with coal. But anyway, as a kid, I used 79% coal, just in case you're interested. Before you leave, I just have to ask you one question about what's happening with this new currency, gold-backed, to be used in all kinds of transactions, but mainly at first energy transactions by the BRICS. It's supposed to be launched late August. Do you have any understanding of it and what it might mean to oil markets?
I believe it when I see it.
Show me. You're from Missouri.
Don't know. Where is the source? Basically, literally, this is, people must realize that they have to be aware of what we call circular information. Circular information, basically, you have a news that's all over the media, and you think, oh, look, it's being covered widely, it must be true, but it's only one source.
Yeah.
It came out of one source, and then it became very common in the media, and people have the impression that, that must be true and correct. I believe
you have to be have the discernment of Sherlock Holmes nowadays to be a consumer of information. And you know what? It's exhausting. Bring me back to guys like Huntley and Brinkley, and when they were reporters and they didn't have opinions, they were reporting the news. Now every news anchor is also an editorial writer. So what do you do? I mean, I feel like turning off a lot of this stuff, Anas.
First of all, I do not have TV at home.
Okay, that's a good start.
And so I don't have TV, and my kids do not watch TV. But the whole idea here is, the more the media goes crazy, the more business I get.
Okay. All right.
Literally. And our clients basically made a lot of money when we corrected the news on the spot, like the Wall Street Journal articles about what's happening in the Middle East, and the Saudi actions and the Russian actions and the UAE dispute with Saudi Arabia, etc. Our clients benefited greatly from it, simply because the moment the news came out and prices declined by $5, we told our clients, ignore the news, and they ignored it. 2 hours later, they were extremely happy.
Okay. So you do give actionable things out to people that are your subscribers.
Yes.
In the markets.
Yes.
All right. Okay. So this is where you find Anas. I've been talking to him for about 3 years or so now, Anas, and I always learn every time I talk to him. And what strikes me, the takeaway is, coal is still going to be popular for years to come and necessary to use. And all the money that has been put into green energy that could have built a great energy independence for the U.S. like it had when we were fracking like crazy. We're never going to see that again, are we?
We are not going to see it, but I think, and this is an important point, probably the listeners should listen to this. There are a lot of people talking about shale, and most people are bearish on shale. That's the end of shale. Is going to peak. It's already peaked, etc. I think we are going to hit another record. It just we need to define what crude is, what NGLs are. But the issue here is this: that what people are missing is this. Companies went to the western flank of the Permian, and they drilled massive wells there, and they ended up with gassier wells, which means that have more gas, has more NGLs. This is not good because they get less money. If you study the experience of those companies over time with those wells, as we predicted in our report, that 2-3 months later, they will revert to zones and regions with a lower API. So instead of drilling for API of 50 and 52, they will go to something like 38 and 40. And that's what we are seeing right now. And people must understand that even if the total number is flat, because of this switch, crude production is going up.
Yeah, well, there are vast projects in Saudi Arabia. I forgot the other countries. There's still a lot of investment in massive projects for fossil fuels.
Absolutely. And we are, I mean, if you look at a country like Guyana, for example, right now, and you look at the plans of ExxonMobil is going to drill 35 offshore wells. Those offshore wells are massive wells. They are not like shale wells of 300 to 1,000 barrel a day. These are 40, 50,000 barrel a day wells.
Okay. Well, Anas, thank you again.
You're welcome.
We'll talk again in the fall. I recommend that people check Anas out, and at least he's a must follow on Twitter, and he puts out a lot of posts. I know because I retweet him, and really appreciate your insights and congratulations on keeping your people on the right side of things, Anas.
Thank you. Thank you.
Great
Have a great day.
All right, our watchman in the oil patch, Anas Halaji.
Thank you.
Okay, so you're very welcome. That's a wrap, everyone. And you could join the team in a little over 15 minutes for the morning edge. Don't just count your barrels of oil or your gas tanks or your pips. Count your blessings. Adios, everyone. Hey, Scott.